Hello everyone, welcome to Crack Grade B online learning platform. So today we are going to start afresh with accounting standards, and specifically we are going to begin with accounting standard 10 that stands for property, plant and equipment. So what are accounting standards? So accounting standards are written policy documents issued by expert accounting body or by the government or other regulatory body covering the aspects of recognition, measurement, treatment, presentation, and disclosure of accounting transactions in the financial statements. So guys, here the accounting standards, they are some written policy documents which are issued by expert accounting body, specifically referred to as Institute of Chartered Accountants of India, or they can also be written or amended by the government or other regulatory body which covers the aspects of every transaction of a particular kind. Say if I talk about inventory, accounting standard 2 covers the accounting on inventory. Inventory, you can say it is stock of the company, or you could say the goods in which the company deals. So when I talk about accounting standard of inventory, that is accounting standard 2, it will talk about the recognition of the inventory in the books of accounts. Also, how do I measure that inventory? How do I treat it in the books of accounts? Say what will be the treatment in the profit and loss statement of the company, the trading account, as well as the balance sheet. Then its presentation, how do I have to present it, and disclosure of the accounting transactions in financial statement. So accounting standards, they will tell us and govern the transactions of a particular kind. There are many types of accounting standards. They are listed in the next slide. Okay, first we will talk about, okay. First, we will talk about the applicability of accounting standards. There are various kind of entities and to whom these accounting standards will be applicable. This is what the slides deals with. So entities are differentiated into two kinds, that is corporate and non-corporate. Now the word corporate, again, it means companies only, but it is further divided into two subparts, that is the small medium sized companies and the non small and medium sized companies. Here the non corporate entities, they are also covered into three types of categories. So when I talk about the corporate entity, let us pick this one first and talk about this. So here it is covered into SMCs and non SMCs. So let us try to understand what SMC is. So, small and medium sized companies, they are the companies that satisfy the following conditions. First of all, it should not be a listed company. Listed company means it should not be listed with the Securities Exchange Board of India, or that is the NSE or the BSE. It's not important for you to know that right now, but yeah, they should not be so big companies that they are listed on the stock exchange board. Then company is not a bank or financial institution or insurance company. So it should not be a banking company or an insurance company or a financial institution as well. The turnover means sales of the company. It should not exceed 50 crores in the immediately preceding accounting year. Now, if today we are standing in accounting year 2020-2021, the immediately preceding accounting year would be 2019-2020. And if that year we have to check, in the current year, if we have to check whether a company is a small and medium sized company, we will see the financial statements of the previous accounting year and we will see if the sales do not exceed 50 crore rupees. Then borrowings also, they should not exceed 10 crore rupees at any time during the immediately preceding accounting year. So this is also important point, that the sale should not exceed 50 crore and the borrowing should not exceed 10 crore. And the company is not a holding or subsidiary of a non-SMC. Okay. Now when I talk about the non-SMCs, obviously everything that is told here, there should be, that should be just opposite. That means the company can be an SMC, non-SMC if it is listed, then it can be an insurance company, a banking company, or a financial institution as well. The turnover, it should exceed 50 crore rupees, only then it can be categorized as a non-SMC. Then no borrowing can exceed here for SMC 10 crore rupees, but for non-SMC it should exceed, and that's it. So there's one question that I'm stuck at, maybe you guys too are, that is that if every type of entity that is a corporate entity, that means that is a company, whether SMC or non-SMC, and on both those companies there is an applicability of accounting standards, then why can't we just say that every entity that is a corporate entity or a company, there is an applicability of accounting standards on that company? Why can't we just say that? Because there are some partial exemptions of accounting standards given to the small and medium-sized companies. See, accounting standards mean that you have to comply with the regulations and the governing things in the laws, that is for a particular kind of transaction, say for inventories or for depreciation. In total, currently there are 29 accounting standards, and there are partial exemptions of accounting standards. Say the SMCs have to follow 10 of them, but the non-SMCs that are big in size and having big turnover and big borrowings, they have to follow all the accounting standards. So that is why we make a distinction between them, that they have to follow some of the accounting standards, but these companies have to follow every accounting standard. Then let us come to non-corporate entities. Now, if they are not companies, then what are they? Non-corporate entities are entities other than companies, as defined in the Companies Act 2013. Partnership firms, sole proprietorship concerns, Hindu undivided family, that is HUF, and association of persons are examples. So every other entity or every other person other than a company is a non-corporate entity. The partnership firms, the sole proprietorship concerns, the HUF. There are again 3 levels of the non-corporate entities. Let us get into that. Here, level 1. These are listed entities. They are not companies. Say, here you can imagine a partnership firm that is not listed, is a bank, financial institution, or entities carrying on the insurance business. Those partnership firms have borrowings that are greater than 10 crore at any time during the preceding accounting year, the turnover greater than 50 crore, and it can be holding or subsidiary. Let us not get into that point. It simply means that you are being controlled or you are controlling an entity that is listed over here. If you are following this principle and these conditions you are satisfying, then you are a level 1 non-corporate entity, and at that time all the accounting standards are applicable to you. However, AS 21, 23 and 27 will apply based on the regulatory requirement. So all of them will be applicable except few according to the requirement. But yes, then we come to level 2 of the non-corporate entities. Here, other than level 1 entity, if they fall under the following limit. So any entity that is not fulfilling this criteria will fall under level 2 entity. Also, all the commercial, industrial or business operating reporting entities that have borrowings of greater than 1 crore at any time during the preceding accounting year, and turnover that is greater than 10 crore during preceding accounting year, or holding a subsidiary, that means you are being controlled or you are in control of any of this entity of level 2, then you have full applicability of the accounting standards. Although all accounting standards are applicable except accounting standard 3, that stands for cash flow statement, and the others are here in the list. Next, level 3, all non-corporate entities other than level 1 and level 2. Now some same exemptions are mentioned in the level 2 above. So whatever exemptions are here, these are the same exemptions for the level 3 entities as well. So this is an overview. Let us again look at it. there are two types of entities, the corporate and the non-corporate. Here it specifically means the companies, and here all type of persons other than the companies. So companies can further be divided into two parts, that is the small and medium-sized companies and the large companies or the non-SMCs. Here for the non-corporate we have level 1, 2 and 3. Now, requirement to follow AS or the accounting standard. Corporate entities are required to follow accounting standards while preparing its financial statements, that are the profit and loss statement and the balance sheet, as per section 129 of the Companies Act 2013. And the non-corporate entities are also required to comply accounting standards if they want to get their accounts attested from the member of institute, that is the CA in practice. Here they want to say is, all the companies here, all the entities that are companies, they need to follow the accounting standard. It is compulsory for them to follow the accounting standards. But here, for the non-corporate entities, there is no requirement to follow accounting standards until and unless they want to get their accounts attested by a practicing CA. That means whatever financial statements they are making, their profit and loss account or the balance sheet, if they are getting them attested by a CA, then only they have to apply the accounting standards while preparing their financial statements. Okay, now the list of accounting standards. Though there are 29 accounting standards currently, as I told you, but these are the accounting standards that are covered in our syllabus, so we are going to focus on these. Accounting standard 2, it is valuation of inventories. Accounting standard 9, revenue recognition. Accounting standard 10, property, plant and equipment. It covers depreciation as well. Accounting standard 11, the effects of changes in foreign exchange rates. And accounting standard 13, accounting for investments. So guys, today we are going to start with accounting standard 10, that is for property, plant and equipment. So first we are going to learn the objective of the accounting standard 10, then the meaning of property, plant and equipment. Examples we are going to see, then the scope or applicability of accounting standard 10, recognition principle, measurement, that means the cost elements that we have to consider while looking at this property, plant and equipment, the measurement at recognition, measurement after recognition, depreciation and disclosures. Okay. Objective of accounting standard 10. The accounting standard 10, that is the property, plant and equipment, prescribes the accounting treatment for properties, plant and equipment. So as we have already considered the definition of accounting standard, that they tell us how do we recognize a particular treatment or a particular transaction in various events. So the accounting standard 10 will tell us how do we treat property, plant and equipment, their purchase, in our books of accounts. So the property, plant and equipment is the new name for fixed asset. Earlier, the accounting standard 10 was named as accounting for fixed assets, but now the new name for it is property, plant and equipment. They are just synonyms, so there is no need to get that to your heart. Next, it enables the users to understand the accounting treatment for investments made by an entity. Now we know that any company or any entity, since entity is a wider word, I will use that more often. Every entity, it invests money on the property, plant and equipment. So what will be the accounting treatment? How do we record it in our books of accounts? Also, it is important to know that accounting standard 6, that was accounting for depreciation, stands withdrawn, and such matters related to depreciation is included in accounting standard 10. Earlier there was one accounting standard that was known as accounting standard 6 for depreciation treatment, but now that has been merged with accounting standard 10, and now currently accounting standard 6 stands withdrawn. So whatever depreciation part is has been covered in this video. So you're going to look at it once we are thorough with the plant, property and equipment. Now, what is plant, property and equipment, or you could say what are fixed assets? When I discussed about the assets, we got to know that there are two kinds of assets. There is bifurcation for assets. It is current and non-current. At that time, we also learned that assets that can be easily be convertible within 1 year into cash or cash equivalents, they are known as the current assets. And other than those that are kept for more than 1 year, they are known as the non-current assets. So here with the definition of the plant, property and equipment, we will try to locate whether these type of assets are current or non-current. So first of all, they are the tangible assets. What do we mean by tangible? Anything that can be touched and seen is known as tangible. Tangible means can be touched. So anything that can be touched, meant to be used in the business for production of goods and services. So they can also be used in the business for production of goods and services. So clearly this means that these are not the goods that we purchase for selling it to our customers. We are not in a business of buying them and selling them. Instead, we have some kind of business where we have to produce the goods that we want to sell with the help of plant, property and equipment, and also for a period longer than 1 year. As I just told you that current assets are those that are not kept for more than 1 year, or if they are kept, they can be easily converted into cash. But the non-current assets, on the other hand, they are those assets that that are kept in the business for longer than 1 year. So here we can see with the third line that plant, property and equipment, or fixed assets in short, are the non-current assets of the firm or the entity. So here in this picture, you can see that the goods are being produced, right? These are the goods, the matchboxes or whatever it could be, they are being produced. But this whole plant and machinery over here, this machine that is helping to produce these goods, that is known as our plant, property and equipment. That is what we are going to learn about in this accounting standards. How do we take its treatment in the books of accounts? How do we show it in the books of accounts, and how to measure its cost in the books of accounts over the period of time? Then these are the goods, these green boxes, these are the goods that are purchased for reselling purpose, or what the business deals in. Here also you can see the van, the computer or laptop or building, as the case may be. These are the goods that the firm or the entity holds, but for purposes of the business, but not to sell them. If it is keeping its records on this laptop, it is to see if the business is running smoothly. Similarly, the van that the entrepreneur has kept with himself, it is for the delivery of the goods to the customers or to their places. So same way here, the tractor, if the business is about construction, then this thing that the businessman has kept with himself, it is for producing the buildings for the purposes of selling them. So here we are going to see the examples for categorizing an asset, whether it is a property, plant or equipment or not. So from the definition, we drew three conclusions: that it should be a tangible asset held for the production purpose, and the life should be more than 1 year. That means that we are keeping that asset in the business for more than 1 year. Machine or computer, it is tangible. That means it could be touched and seen as well. So yes, it is tangible. Held for purpose of production. So yes, we keep a computer or a machinery as here, this computer, and this machinery or this machinery for the purposes of business, for the purposes of production. And life more than 1 year, it is not that it would be dead in 1 year or it would expire in till 1 year. No, So since all these three things we can see in this product, that is machinery and computer, we say that it is a plant, property and equipment. Land, it is tangible, can we touch it? Yes. Is it held for the purpose of production? Yes, because if someone has a production of a building, the construction of the building, it uses lands for the production purpose. Where will you create your land? And if anyone is doing its business, you don't do that in air. You have to stand on some platform to do it. So yes, land is definitely used for the purpose of production. Then life more than 1 year, definitely yes. So since all these three components are present in land, it is known as a plant, property and equipment. Next, building, it is tangible, it can be touched, then held for the purpose of production. If we have one business entity where it is a building in which we function, the employees function, so that building is definitely for the purposes of production or for the purposes of business. Then life more than 1 year, definitely yes. So all three components are present, therefore it is a plant, property and equipment. Next we have furniture. Yes, it is tangible, held for purpose of production, yes, and life more than 1 year, yes. So all three components are present, therefore it is a plant, property and equipment. Computer software. Can a software be seen? No. Since it cannot be seen or it cannot be touched, we call it tangible. No, it is not a tangible asset. Next, held for purpose of production. Whatever software we have installed in our laptop to see the records of the company, whether it is performing well according to the previous year. So definitely it is held for the production purpose or for the purpose of business. Then life more than 1 year, yes. For example, Tally software or any other software, we pay charges for it for the renewal. But yes, it has life more than 1 year. But since it is not a tangible asset, all three conditions are not satisfied that are important for plant, property and equipment, and therefore it is not a plant, property, equipment. Stock. Is it tangible? Yes. Stock is the goods that the company deals in. So yes, it is tangible. Held for the purpose of production? No, because we produce using these goods to sell these. So it is not held for the production purpose, but they are produced and sold in the markets. So no, it is not held for the production purpose. And then last thing, life more than 1 year. It could be, it cannot be. If the material is something that are consumables, then we cannot say that it can be uh, kept as an inventory in the business. So it cannot have life more than 1 year, and it can also have a life more than 1 year if we are selling laptops or computers, then we can have a stock of them. So, but since the second condition, that is not held for the purpose of business, therefore, it is not a plant, property and equipment. So we can very well see with the help of these examples that to be categorized as a plant, property, equipment, we need to have three things at all times. That is, it should be tangible, held for production purpose, and life more than 1 year. This thing is very much important for the exam point of view, for the MCQs that I'll share with you later on. So you need to understand what can be categorized as a plant, property, equipment. Now the scope and applicability of accounting standard 10. Till now that we have discussed that accounting standard 10 is to be applied in accounting for all the property, plant and equipment. Everything that is categorized as a plant, property, equipment, there will be an applicability of accounting standard 10. And this standard is not applicable to, though there are some exceptions. First one being the biological assets are those assets which are consumed. These can be plants and animals. So biological assets that are consumed and are plants and animals like the fish, wheat and chicken. They do not qualify for being a plant. They do not qualify for being applicable for this accounting standard 10. They relate to agricultural activities excluding produce on bearer plants. Now, okay, biological assets, they also include a plant that is bearer plant, which I will explain you just now. But this standard of Accounting standard 10 is applicable on bearer plants, but it is not applicable on other plants and animals. First thing. Now, what are bearer plants? Bearer plant here means a plant that is used in the production or supply of agricultural produce. Do you see a plant, a mango tree over here? Mango tree is a bearer plant. Why? Because it is a plant which helps in the supply of agricultural produce. It has two parts. First of all, it is a plant itself, and then when it produces or gives mangoes to us, then the mango that we have, it is a biological asset. That means it is a plant which is the produce and does not qualify for the applicability of accounting standard 10. So accounting standard 10 cannot be used on this consumable thing. But here, the bearer plant, that is this mango tree, accounting standard is applicable on it. That means it is also going to be recorded in our books of accounts. Then the second thing is wasting assets, which include mineral rights, expenses related to exploration for and extraction of oil, minerals, natural gas and other non-generative resources. So wasting asset, they mean the mines that we have. They are also not included for the applicability of accounting standard 10. Now, recognition of asset under accounting standard 10, property, plant and equipment. Till now we have seen that what is plant, property and equipment, and if it is a plant, property and equipment, then the accounting standard 10 will be applicable on it. Other than the biological assets, that means fish, wheat, chicken, those things, those assets that can be consumed, that are the plants and animals, this accounting standard will not be applicable on them. Also, a bearer plant is an exception, where I have given an example of the mango tree. The mangoes here, they are known as the biological assets, accounting standard not applicable on them. But the mango tree, it is applicable on them. The mines that we have, mines, all the expenses that we take up for the mineral rights and the expenses related for the exploration and the extraction of oil and minerals, nothing is applicable to them. Now, recognition of the asset. That means how do we recognize the asset in our books of accounts? Till now we have studied the types of assets that are covered under accounting standard 10. Those assets that are covered in accounting standard 10 shall be recognized in the books of accounts only if it is apparent that the future economic benefits related to such assets would flow to the business and the cost of such asset could reliably be measured. What does this mean now? We have seen that accounting standard 10 will be applicable on the plant, property, equipment and the bearer plant. Now, how do we recognize this in the books of accounts? Now we have seen, once we have seen that yes, the accounting standard is applicable on it, but there are two conditions for it to be recognized in the books of accounts. First thing, if it will generate future economic benefits to the business. Example, if we are making a night shelter for the poor, okay, for donation or for charity purposes, we make a night shelter for the poor. It is tangible, right? And here in this category, let us look at, as an example, the night shelter for the poor. It is tangible, yes, it will be. Held for production purpose? No, it was not held for the purposes of production. It has life more than 1 year, yes. Will it qualify for plant, property and equipment? No, because it is not held for the production purpose or for the purposes of business. Therefore, what will happen? It will not generate any future economic benefits. So it cannot be recognized in the books of accounts. Secondly, if the cost of such asset could reliably be measured, only then we have to cover it in the books of accounts or recognize in the books of accounts. If I have seen here that okay, machine or the computer is tangible, held for production purpose and the life is more than 1 year, it qualifies for plant, property and equipment. But I cannot reasonably apply methods to recognize its cost or to verify what cost it is. Maybe you have received it from a relative as a gift and they do not tell you the price, or it is a very uh, uh, it is a very old laptop that you have been gifted by your relative or just given like that, you cannot reliably measure its cost, or whatever the case may be. If that is the case, that you cannot reliably measure the cost of the asset, then you do not have to recognize it in the books of account. So there are two conditions, and in between is and. That means both should be fulfilled. It should generate future economic benefits, and the cost should be reliably be measured. So guys, that's it for today. We have, in the contents, we have covered it till here. That means we have covered the objective, meaning of plant, property and equipment, covered the examples, the scope and applicability of Accounting Standard 10, and the recognition principle. Later on, when we'll see in the next slide, we'll see that whatever asset qualifies for being recognized in the books of accounts, we will see how do I measure it for purposes of recording it in the books of accounts. So that's it for today. I will continue our lecture in the next class. So you can go through the courses of RBI Grade B, SEBI Grade A, and the other courses on www.crackgradeb.com. These are the star performers of our website. And thank you and happy learning.